Hello dear students, this video is all about the bank deposits. Why do we invest? We know that we make two types of investments. One set is called the real investment, the other is called the financial investment. Buying of a property, buying a building, buying a machinery, buying an office, all these things are real investment. Investing in bank deposits, investing in provident fund, investing in insurance, these are all financial investments. So there are two types of investments, real investment and financial investment. I have purchased one sovereign of gold. What sort of investment is it? It is a real investment. So you know about financial investment. Bank deposits are financial investments. Now another question I ask you, why do we invest? Whenever we invest, we have got three things in mind. 1. Safety. 2. Growth. 3. Liquidity. Safety means, financial safety means I must get back what I have invested. That is called financial safety. Now growth, why do I want my money to grow? I know that inflation is playing a villain. Money value comes down by the day. So I must ensure that my money grows to cover the impact of inflation. That's why I want my money to grow. Third, liquidity. What is liquidity? The liquidity is the capacity of an asset to get converted into cash. The liquidity is the capacity of an asset to get converted into cash. Now, the bank deposits are the most liquid investment, the most liquid financial investment that we can make in India. Listen, I have invested in 5 cents of land. I want some urgent money. It will be difficult for me to sell the land overnight. So we can say that investment in lands are generally less liquid. But you make an investment in a bank, at any point of time you can liquidate, you can get your money back. Now what are the different types of bank deposits? Bank deposits are generally of two kinds, demand deposits and time deposits. Demand deposits are checkable deposits, meaning you can issue a check. Demand deposits can be bifurcated into two, current account, savings bank account. Current account and savings bank accounts clubbing together are generally called CASA accounts. CASA means current accounts, savings accounts. Savings accounts, or popularly SB accounts, savings bank accounts, are meant to encourage savings among the public. You can park your fund with the SB account, you can withdraw the money as and when you require by issuing a check. You will get an interest. Presently, I think it is 3%. So 3% is the minimum interest that banks have to give. Anything beyond that, bank can give. That is the prerogative of the banks. Current accounts are for business people, business accounts. Current accounts are business accounts. Savings accounts are to encourage personal savings of individuals. Current accounts do not provide you any interest. They are interest free. So you can park your account, your money in the current account, and you can withdraw the money as and when you require. On SB accounts or savings account, there are restrictions as regards withdrawal of money. Your number of withdrawals is limited, but when it comes to current account, there is no such limitation because it is your account, your business account, so you must be able to issue as many checks as you may require. You have to have as many withdrawals as you may wish. So you have an idea about the current account and SB account now, I believe. Now the time deposit. Time deposit means that can again be divided into two, fixed deposits and recurring deposits. Fixed deposits are generally accepted for a maximum period of 10 years by banks. You cannot invest a fixed deposit for beyond 10 years under ordinary circumstances. So a fixed deposit will fetch you more interest, generally more interest than what you may get when you make an investment in the savings bank accounts. So generally for 7 days up to 10 years, different tenures you can invest. So you will get more interest, as I told you. Similarly, recurring deposit. In the case of fixed deposit, you are making an upfront payment, meaning you are making the payment in the beginning itself and the money is kept for say 6 months, 3 months, 1 year, 2 years, 3 years, etc. But in the case of recurring deposit, you are making a periodical payment. Listen, today I have invested an amount of money, say 1 lakh rupees for 10 years with a bank. After 2 months or 3 months, I want to have a premature withdrawal. Is it possible? Yes, it is possible. Even though I invested the money for 10 years, I can make a premature withdrawal after 2 months or 3 months, or after on the second day I can withdraw. I must be given interest also, but at a lower rate than the promised one. The interest rate will be lower, but I must be paid interest for the minimum period. So, the chapter concludes now. In the next chapter, I shall come out with more valuable information with regard to banking and finance. Thank you very much. Bye-bye.